So let's start off here on the euro dollar. Euro dollar is one that we were tracking really all week, but specifically late this week on the Tier 1 trading platform. And what we were looking for was this structure shelf to be violated, and we were looking for a continuation down. You can see that happen just like we called it, which was awesome. Now, the thing about this, however, is that we had multiple levels that we were projecting. We had a very conservative level, which was right here. You can see this inside level of structure. And we had a more aggressive level, which was down here. You can see this outside zone of structure. Now, obviously, price has come to that inside level of structure. We have technically not broken and closed below that level. Inside structure is weird with that type of stuff, so just ignore that fact. But the point is, we have come to that level of structure. We have retraced back up again, but there's still room to move to the downside. In fact, if I just take a Fibonacci, I don't want to erase all of that. Let's just erase this. If I take a Fibonacci extension, I bet we're going to have some type of confluence at that level. Fibonacci extension tool, which is used to project where price action may extend to, from our swing high right here, this little green guy, this pin bar, to our swing low right here. Should probably zoom in and make it easier. And boom, if we go straight down, we've got two things happening. We have a 127 extension sitting right under the 110 even handle. That is a psychological number, or a dollar even. Oh yeah, 110, sorry. Yeah, 110 even handle. That's a psychological number. And then we have the 1618 a little bit lower in that zone, sitting right above another psychological number, which is 109. So both of those levels are decent levels to shoot for if you're projecting that extended target. Now, how do you get in? Well, there are a few ways that we can get in. I actually got a question about this under one of my last YouTube videos saying, Akil, can you show how you go to a lower time frame to look for entries? And I said, if I have an opportunity, I'll show it. And guess what? We've got one. So I'm going to show it. But first, we're going to go up to the weekly, or excuse me, the daily time frame, because if you're a higher time frame trader, there's also a way to get involved here. So let's pause that thought 1 second and let's go back up to the daily, right? If we go up to the daily, you can see that we still have our normal zone down there. We'll keep these levels on here. Let me just erase this finally, and I'm going to draw back in our targets at 110 even, bang, and 109 even. Again, these are rough areas, but you guys get the point. You can see what we've done here on the daily chart is after spiking down, right, we've retraced back up. We've put in some pretty good bearish candles, right? If you look at the wicks on these candles, right, they are all predominantly to the upside, which means the bulls had tried to push up and they got rejected. We ended such of these three candles with a lower low, lower close. And if you guys have been friends of the channel, you know that a lower low, lower close is a very important candlestick signal for me, either for a violation of structure, which sets up a new prediction, or an actual entry. So if you're someone that's entering here on the daily chart, you may have an entry reason right here at the lower low, lower close. I don't know if you're going to get a good risk reward. That's a different story. Let's just kind of mark it out since we're here already. If you got in that market, an ATR stop probably wouldn't do it for you. I'm not going to take the time to calculate it, but assuming your stops are above that that highest red candle, probably wouldn't make sense, or maybe just make sense if you're going for that 110 level. If you're going for the 109 or a little bit down there, you can probably make it work. But certainly a tradable opportunity here on the daily. Now let's go back to what the traders asked about going down for a lower reason for entry. Well, here's what we would do. We have on the 4 hour our break and close below structure. You can see our pullback right here. So we're asking ourselves, okay, within this pullback, how can I look for a smaller pullback in order to get involved in the trade? So we hop down to our lower time frame and we see that price is pulling back. This is where you would wait for price action to give you your reason for entry, whatever that reason for entry may be, within your zone, right? So our zone is going to be big, right? By the way, if you're screaming descending triangle, thumbs up. I'm not on video today, but I'm giving you a thumbs up and a cheesy smile. Good job, right? But this is your zone, right? Essentially, you are looking for price to pull back anywhere in this zone. Technically, the zone goes all the way up to here, but this is the zone that we're really paying attention to. So what you would be doing, let's say if you require a lower low, lower close, is you would wait for price action to push up in this zone. Who knows where it will go? I can't tell you that, right? This would be a good level right here, about 111.97 or 112, 112 even would be a fantastic level. And then once we get to that level, or once we get in the zone, once price action gives you your entry reason, lower low, lower close, then you would enter the trade. So it's essentially going down to a lower time frame, taking out your magnifying glass, getting a kind of a more in-depth view, a more detailed view of what's going on, and looking for your entry reason there. So decent opportunity on euro dollar, not a super grade A opportunity because we've already come to that first conservative level of targets, but I still think there is meat on the bone here, and it's certainly a nice play, especially if you're looking to go all the way down to near that 109 level. Next up is going to be the pound dollar.